Hello, Warriors. How you, Ren, Brock, Alexandra, Shahab. Hello, Money. Kevin, how are you, my trading warrior brother? Jeffrey, nice to meet you. So, hi, Irina. Ziggy, are you here? I think your tweet was answered yesterday. Turnaround Tuesday or tepid Tuesday. I'd say that it was a turnaround Tuesday, and the only thing tepid was longs in almost every instrument except the dollar. Yeah, added yesterday. Out. Actually added yesterday. Anyway, so big down day in the precious metals. Everything's trying to recover. It was a tape bomb about, you know, what a dramatic day when you have Jay Powell almost begging for some fiscal help from the Congress, and then the tweet from the president. I'm not sure. I heard he was starting to walk it back. Uh, Big rebound and everything. In fact, S&P got all the losses back, but not the gains. So you went home thinking you really had it. Now, I don't know, but there is a feature that I'd like to show on the Nasdaq. You see this high here in S&Ps. It's 2 hour. It diverged, but Nasdaq still has the look of a Head and Shoulders. Look how much weaker it is, even the recovery. One thing you could say for sure, well, you can't say for sure, but even Shy Girl was talking about taking out last week's low, which was here in Nasdaq, that we have problems. But doesn't this have a little bit of a look of a Head and Shoulders top compared to the S&Ps, where there isn't a right shoulder, just blew through? Yeah, I mean, the art of the deal, right? Yeah, that's my target. Actually, looks like you have a descending triangle in the gold. Doesn't this look like a descending triangle? So, what did we hold yesterday in the gold? Maybe took it out by a shade, was the initial low off the highs. So, I mean, if you want to be real bearish, you just take the move from the high of the descending triangle to the flat line of the triangle, and it actually measures a shade under 1700, like 1680. But your numbers are good. So I asked Dan Popescu, he's calling it a symmetrical triangle, where we broke down this day. Okay, so the dollar is given some back too, but it looks like it held right where it had to. In fact, I didn't buy the dollar because I was waiting for a 50% retrace at 24. I guess it was close enough, but I expressed dollar longs with gold shorts yesterday. So it was the same trade. Yen's making new highs. So even though yields came off on a little bit of a flight to quality, I certainly wouldn't call what TLT did yesterday with the market getting slammed much of a flight to quality. And yields are back up today. Okay, you mean a reverse Head and Shoulders? So here's how yields look today. Like everything else, it got smashed as the market got smashed, and it's, I still think we have quite a ways to go in yields. The market could fight it for a while, but I don't think the market's going to be able to ignore it if we get up towards 140, if rates double from here. Also, yields are important. And really the key for the yield thing for me also was US dollar yen making new highs. Congratulations to Grega, who's long, not that far away from his, well, another 97 pips away from his target. Great call by Blake yesterday in Canada at 32.50, certainly held. If it takes out yesterday's lows now, I wouldn't be there. But, Blake was talking about, with what crude was doing, that this 32.50, even though, probably shop for some stops here, that was almost 100 pip day trade. So there were some pretty good calls like usual every day here in our community. So if you had a good day, I know that our promo is over, but if Joe Perry's here and you want to say thank you for what we do here every day to serve you, perhaps you could reciprocate and contact Joe Perry and he'll give you a deal. There's Joe. Not on a 1-month deal. It has to be semi-annual or annual. Those are Joe's rules. And you can just email him, if you're regretting that you missed the promo. We'll open it one more day for Joe to work something out with you. So there's his email address. I hear from everyone with words. Thank you guys. Oh, you do so much. And it was interesting at the summit. One of the comments from an attendee, and tell me if you agree with this attendee. Hi, Richard. He said, you guys just keep giving. Okay. The best kind of relationship is when you give and receive, because if you just keep giving and it's not ever reciprocated, it's hard to keep doing. So for most people, for me, I keep a list. Let's see, I did this for you, and I did this for you, and I did that for you. So you owe me. So get in touch with Joe Perry and he'll help you join. All right, just a couple other markets because I'm sure Blake was busy yesterday with all the volatility, and I'm sure you are. Yesterday, I talked about a turnaround Tuesday trade in Aussie Kiwi down here, and it's actually turned out. I said I didn't have to be directional, and I'm looking for my theory. I'm working with some other people, and I have a bet with them to see if my theory works. Do you guys know what my theory is? What am I looking for here in Aussie Kiwi? And then I'm going to turn it over to Blake. And why? So not only good calls. I mean, I at least once during my intro, I've been trying to teach you guys. I know a lot of people have learned. No, why is it unconfirmed? You're saying this is unconfirmed? So you need a mentor. Okay, what about the RSI? It's not unconfirmed. What is it? There you go. All right, so what's the implication? I knew Jess would know. What's the implication of it? Yeah, that there could be another high. We don't know if it'll confirm or not, but what's going to give you an indication that can happen is, again, coincidentally, I said this is starting to look like a head and shoulders formation. First, it was a wedge. So I was long here, out here, and then recommitted yesterday in here. And this looks like a head and shoulders bottom to me at 108.50, and there's the moving average at 108.58. And you just take a measured move, call it 150 pips. It gives you 110, and 110 is pretty close to The old high is 110.43. Okay, so it's not over yet. Something I think I missed was Euro pound. Okay, so it's really been choppy, right? I mean, this stuff and then this stuff. But I noticed when it pulled back to this old resistance support, it really went. Now we're back at resistance here. And, what kind of high do we have here in Euro pound? Kind of similar, not as dramatic, but I'm looking for these highs to be taken out. Look at this impulsive move. Look at this flagpole. I know it's, although it still could be just a little ABC, but I think we're going to take out. I'd still will be happy to know that I think he'll have a shot at 92 again. I think it might even be higher above this high, which is 92.70. Now I'm going to let the rest of my teammates cover crosses. No, I call this a confirmed high. Because look at this, straight line move and RSI confirmed. Okay. I mean, I'd have to go all the way back to March. And, in time, you can look at divergences 8 months apart. Okay. Good morning, Blake Morrow. How are you? I really enjoy your chart of the days every day.
Thanks.
Something else we do for people.
And thank you. Hey, I was just gonna say, Stelios has to bow out here shortly,
Oh.
so he's gonna come in and say hello to everybody. And what's up, Stel?
Hey, good morning. I'm gonna say a couple of things and show one chart. So I'm taking the screen. Can you see my?
Yeah, dollar
okay.
index.
Yes. So I have to go, unfortunately, about 10 minutes. So I thought I might go first and say a couple of things.
Don't waste time saying what you were going to.
Yeah. So yesterday, obviously everybody knows it was another tweet storm from Donald Trump, who said basically that they're going to stop negotiating for the stimulus bill until after the election. Even Treasury Secretary Mnuchin told Nancy Pelosi formally that this is the end of talks. Then again, Trump did go back and he did say, look, there needs to be stimulus. So it's a bit of a two-way street, just like it has been all along, but it was pretty powerful. And we all saw how equities reacted lower, but now they're going back higher again. So basically, yeah, he said something, but he's going to say something different tomorrow. That seems to be the feeling.
The art of the deal.
Yeah, the art of the deal, exactly. So this is on this front, we're just getting tape bombs all the time, and it's going to be like this until the elections or until close to the election. So we have to be very careful. Trade sizing, I'm reducing mine. I'm doing a lot less than I was before. The other thing I want to talk about is UK. Naturally, we're getting too close to the end there as well. Boris Johnson said this morning. And I quote, "This country has left the EU on January 1st. We're going to take back full control." So that's what the Brits want. And to be completely honest, I don't blame them. So Boris Johnson is playing hardball. Both sides are playing chicken, basically. And there are more, how should I put it, positive things being said. For example, the trade minister in the UK said, look, a UK-EU deal is doable. Obviously it is. It was never an undoable thing, but it's still something that can be done. And even the Irish foreign minister said that he's optimistic on the Brexit deal, and fishing is still the main obstacle. We knew that. So there are a few things being said here and there in terms of the UK. The pound is quite volatile. We've seen this. It is trading in a relatively narrow range given the circumstances, but you see EG go from 90 to 92 and back to 90, and chopping around quite a bit. The thing that really that I'm watching now is still the dollar. The dollar is driving pretty much everything, and this is a chart, the DXY chart. I I've been showing this for weeks now, and look, it's a weekly chart. It's a 10-year trend line. And I said before, look, I think this is going to go touch the trend line and move higher. It didn't. It broke down, but it's coming back up. Now, imagine if this is a false breakdown. I personally think a dollar spike is coming. One way or another. I don't know what's going to cause it. Could be the elections, could be something else, but I think a dollar spike is coming. And if this
How about yields?
yield is a very good one. It could be. And remember, yields were the main cause why late 2018, we had a drop in equities and the spike in dollars. So very, very good point. And I think that could be happening. And we're seeing treasuries inch up in terms of yield. You said, Dale, very correctly, why can't we get to 1% or, 120, 140? It's very people think it's impossible. It could be very easy. So I think this is the main danger, that we see the dollar spike, equities go lower, yields go up, and commodities, metals get pushed lower as well. So that's what I'm looking at. I still think gold and silver, I think they're both going down. I am a big bull in the medium term, but I think gold could easily go to, let me take this out of the way. How do I move? There you go. I think gold could easily reach these 1800 level. I think it's probably going to go a little bit further and then go up again. And I've said this so many times. I tweet about it. Actually, this is let's go on the daily. This is my view on silver, and I'm waiting for that. 21 somewhere there. But as I said before, I'm keeping my trade sizing smaller than usual. Volatility is high, and we all have to be careful. One last thing I want to say: the Norwegian kroner is actually performing well today, even though Norges Bank said that they said, look, negative rates, we probably won't need to go there, but if there is big turmoil or something that forces us to go there, we will go to negative rates. But I'm guessing that the markets were expecting something a little bit more dovish. So the kroner is doing relatively well today, even though the oil is dropping again today. For those who trade Norway like I do, it's interesting to see. And that's it. Those are two or three things I had to say, so I can pass.
Nice.
There.
Hey, Stell, I hope that your teacher gives your parents a good report on you, that you were a good boy. Good luck on your parent-teacher conference. I know you're nervous, and your dad will ground you if you did bad in math. So, okay, have a good one, bro.
Thank you very much. Thank you, everybody.
Hey, thanks, Stelios, and yeah, good luck with that parent-teacher conference.
Yeah,
I'll tell you what, they do get trickier as the kids get older. I will tell you that much. They do. All right. So, and thanks for your overview. Speaking of yields, yesterday, Coach, we had this. I want to look at. I'll pull up, like, here's the 10-year.
Yeah.
The bond market, right? So, the 10-year broke down 2 days ago, and then we bounced yesterday, and I'm like, oh man, are we just going to unwind all this? But here we are today. We're seeing that sell-off in bonds again, so a rise in yields. And it's coming across the curve. You can see the 30-year as well. Even some of the lower end is moving pretty aggressively too. And Stelios, pointed it out. The rise in yields could be a catalyst that drives the dollar higher. The euro's recovering today, and I know stocks are recovering; they're bouncing back. So I get that, but I don't understand why the euro's so strongly recovering. Especially when you take a look at like currencies like the Kiwi, which is barely moving, the Aussie, which is bouncing, but it's still trading a little heavy. So I don't know if the euro dollar is like misplaced at this point. I still believe, and if you read the chart of the day yesterday, as long as we're below 118, I think it's bearish. But it is it has bounced pretty aggressively, and I've been actually impressed. Now we are at a 618 retracement. I'm going to go ahead and start putting together the bias chart right now, but but just note that we are at the 618 retracement. I know a couple people in our chat room, like Amir, just started selling the euro up here, and I think that you see all this previous support. It may fail here, but I will write down 118 as being resistance today, just in case this is a headline driven market, isn't it, Coach?
Yeah, it's amazing. I mean, when that that tweet came across, I mean, S&Ps were up sharply. There've been some tells. NASDAQ hasn't participated like S&Ps, but yeah, I mean, it gave up all those gains. I think we were up 30 handles, gave it up in a minute.
Yeah.
So all we've gotten back is the losses in the S&Ps. We haven't recaptured the gains that it had before the tweet.
Right. And, and so that's oops, hold on. I'm just doing something over here.
And then you knew, so do you hold positions in this environment? I went to the door on everything yesterday because, he could change his mind. I mean, he's changed his mind on everything, and looks like that's what's happening. I don't think you could hold positions in this environment. I think you have to take it when you got it.
And I'm glad you mentioned that. So last night I took my son to soccer practice, and he does goalkeeper training on Tuesdays and Wednesdays is his goalkeeper nights, and it's like an hour and a half basically, and I just walk around in circles around a park is basically my exercise. But I saw the tweet that that Donald Trump wants to airline stimulus and enact the CARES Act for the rest of the PPP, which that's why stocks are actually recovering right now. It's kind of backtracking what he did yesterday. And so the dollar Canadian was actually hitting new highs prior to that, and then it reversed, and we were at 133.23, and I actually took half of my dollar Canadian longs off the table at that point, because I'm like, okay, this is one of the bigger problems with the Trump administration. And just so you guys know, in currencies have been, over the last several years, currencies volatility has gone down. One of the reasons why it's gone down is because you have everybody just kind of plowing into the equity markets. But the other reason why is because you have very erratic behavior from the leader of the free world. I mean, if you're an institution, how are you supposed to establish a big position in this and that and the other thing? And I say institution, I should say, institutional sized traders, when you're trying to, and I'm not talking a central bank, I'm talking about people trying to profit from, being positioned a certain way. It's really difficult when, things move because of a tweet or whatever the case may be. And, that's a case in point yesterday. I mean, I'm sitting there, most people are fast asleep, in Europe, and then everybody in the US, there's a lot of people that were already going to sleep by that time last night. And, I mean, that's was the catalyst that drove the dollar Canadian lower. And this is just using that as an example. The euro, that's what caused this euro rally overnight. So, it's really hard to be directional, and it has been for several years now, because of these random tweets that hit the market at different times of the day. So anyway, let's talk about like some support. So support for the euro is going to be 117.25. Okay. And let's go ahead and take a look at the cable. So the pound, this is, I actually mistraded this yesterday. I actually shorted the euro sterling, and I got stopped out overnight, right where we're currently at, actually. The cable, I should have not done it. And the reason why I shouldn't have done it, because I knew the cable was struggling at 130. It's like, in order for me to short the euro sterling, I should make sure that the the pound is above 130, but it, you know, that was a mistake on my part. But anyway, the cable's still struggling at 130, supports at 128, and that I know better to be trading around this thing because it is very much headline driven, as you guys know. And so, yeah, it's like, why even deal with it? We're in a range. Let's go into the Aussie. So here's the Aussie. Again, Aussie's trading a little heavy. We had this little double top. That actually should play down a little bit lower. We're back at basically the neckline. I do think that the resistance right here at 71.45, so I'm going to write down 71.50, should hold. This is still bearish. Okay. Because if you look, it's double top. This should eventually play down to, you know, 70, 60. So support today will be at 71 cents. But I think you have to approach it with a bearish spin. Same with the Kiwi. If you guys haven't seen the Kiwi's trading heavy. I mean, look at that thing. You know, this is a flag pattern. We got the big double top, 50% fail. You know, breakdown yesterday, failure to really rally here. I think the risk continues to be lower. So I think you got to keep an eye on it, you know, especially if we break through 65.70. What is this low right here? 65.70. That would be bearish. Okay. Resistance is at 66.15, just in case we continue to get a bit of a recovery. Okay. I'm going to cancel it. I had an order overnight to sell right there, and it didn't hit, obviously, so I canceled it since I'm in front of the computer, but I totally forgot that I had that one out. 66.15. Dollar Canadian. Okay, so the dollar Canadian, as I was explaining to you guys a little bit earlier, well, first of all, we held the neckline yesterday, you know, but we're pulling back right now. I still think that any dip back down to, and what we might be developing here, see this like kind of inverted head and shoulder pattern. This could develop, just in case you know, just something that we can keep an eye on.
Yeah, nice look.
Yeah, I mean, you know, you got something that looks like
Yeah.
that, right?
Yeah.
Inverted
That
head and
would
shoulder
take it
pattern.
to the highs, right?
Yeah, inverted head and shoulder pattern and an inverted head and shoulder pattern. So that support would be 132.65. And then if you think about like all this previous resistance here, that all comes in. Let's just write 132.65 for today. It's still bullish. Well, we're above there. We do have to break, let's say 133.50, because that would be this resistance here. Okay. Dollar Mex. Okay, so I'm long a little bit of dollar Mexican peso today. I've been buying these dips this morning. Why? Look at this. Look at this daily candle. First of all, figure out what we've done. Channel resistance, broke through it. Test of the channel resistance, successful test of the channel resistance, bullish outside day. Okay, almost a bullish engulfing candle, but it's a bullish outside day. So I'm playing into this weakness today. So I've been buying, you know, this dip down here.
Be right back, Blake.
Okay, yeah, sure thing. I'm not super aggressive because you know, obviously stocks are recovering right now, and yeah, it's hard to be aggressive in this environment. But I am trying to play into this weakness because I think it's going to trade back up into the 70s later this session. So But for right now, oh, we just had, do we have news? Oh yeah, we had weekly unemployment claims. Where was my Stelios? Oh, he's gone. Where's Steve? No one's paying attention. Forgot data is coming out. Sorry, guys.
I'm here. Sorry, I was muted.
No, that's all right. We had, I forgot that we had weekly unemployment claims that just came out. So, Kashikari, don't favor using interest rates to tamp down stocks. Huh? Wow. We're going to keep letting the stocks run.
Of course, that's the whole Ponzi scheme here.
Yeah. But I mean, this
It's
is
based
Kashikari.
around asset prices. That's the only thing they can do, actually.
Yeah. Anyway, well, we can come back to that conversation. Let me go ahead and finish what I'm doing here. Dollar Mexican peso. So support, I would say, is probably today's low, maybe even well, it's a little breakout point, 21.43. Actually, you know what? Take that back. We got to look at these lows here. This is 21.30. It's this all these lows here. That's where support's really at. Oops. Resistance obviously is going to be this 21.78. Okay, moving down here, Swissy. I think we should just look at this. And you guys know I have like zero interest in trading this right now. So support at 91.30. This 618's right here, so it's 91.40. Resistance being 92.20. That'd be that last hourly high. And one of the things that you guys, well, actually, I'll get to that here in a second. US dollar, Norwegian krona. Speaking of, we were looking at inverted head and shoulder pattern with the dollar Canadian. Watch this one too. And I know Stelios is talking about Norway being a little stronger today. Let's see how we react down here at the previous 38% retracement, right? That comes in at 9.25. And if you guys have never traded the Nordic currencies, I really enjoy actually trading Norway. The krone, it's the volatility is really good. You know, whenever you're trading a new instrument, for those of you that never have, just trade the smallest amount you could possibly trade, just to get a feel for how the pip values work, you know. But yeah, you should. It's one of those that I found it to be a very you know, good vehicle to express, you know, crude weakness, dollar strength, you know, that type of thing. Resistance would be right here at 940. I think we wrote that down yesterday. So I do believe this is still bullish. S&P. We should be pushing resistance right now, actually. I'll write down 3,400 for today, but this is really resistance where we're at. So and where were we supported overnight? 33.40. So okay, I'll write down just in case, just because this market obviously, I'll write down 3,300, 33.40 is being supports. That we are range bound. Gold hell of a sell-off yesterday. Nice bounce back today. That probably shook the confidence of a lot of longs right there. But resistance, support. So that comes in now at 1875. Okay. And then resistance will be this trend line, which now is at 1915. Okay, and let's see, dollar index. Support today will be this 93. If we dip down to 93.40, I think it's giving you another look. Resistance at 94 still. I'm going to say that that's still pretty significant resistance. Dollar yen. This is the one that we got to pay pretty close attention to, because what happened overnight is we broke out. So we broke out above that 105.82. So that should be support now. 105.80, and resistance is going to be kind of tricky. So, okay. In the event we continue rallying here, first resistance is going to be 106.30. This 88% retracement, the underside of this trend line would be ultimately where I think we're going. But I'm going to write down 106.35 because that's a 78% retracement for now. Remember, yields are rallying, guys. So with yields rallying, dollar yen could reciprocate and rally as well. Rahul asked, hey Blake, sorry I missed dollar Canadian. You see an inverted head and shoulder by chance? Yeah, it's like an inverted head and shoulder pattern and an inverted head and shoulder pattern. So just big inverted head and shoulder pattern, possible small inverted head and shoulder pattern as long as we hold the 70. So yes. Okay. Steve, good morning.
Good morning, mate.
So,
good morning, everyone.
So how do you feel about the middle of the night? Well, middle of the night for you, Trump change in heart. Oh, wait a second. I just walked away from the negotiating table, but now I need to go back. So how do you feel about that?
I understood why he initially seemed to be withdrawing from it. I think he would probably want to save face and act like he's taking the initiative, while perhaps there would be no deal under current circumstances. I'm pretty sure, because we all know how much focused he is, I'm pretty sure that, as soon as he realized that the market, reversed lower hard, and probably we would see continuation lower, he needed to do some damage control. So in my opinion, it has mostly to do with the stock market reaction. Unfortunately, we've got to the unpleasant point that central banks, politicians, and economic policy are evolving around a few indices that have to do with stock prices and not the real economy. But it is what it is, right? That's what we have in our hands.
You
Yeah,
think
that
he
is.
covered his short positions before he changed his mind?
Yeah.
And his friends?
Yeah. I'll tell you what. I was looking at the futures based on when those comments came out, and the futures they rallied for a good 5-10 minutes before his comments came out. So,
Oh,
there's always somebody on the inside that knows. You know how it is.
Like
Don Jr.
You are a staffer. You know. you hear this because obviously, because before they do something, they discuss it, and you just call on your mobile phone like your friend that's in the industry, and like something that is very likely that blah blah blah, and somebody buys.
Oh, I'm sure. I'm sure there's a lot of that going on. This is probably one of the more looser-lipped administrations.
Yeah,
As
yeah.
far as that goes. All right. Well, hey guys, I'm gonna pass over to you, and hope everybody has a great trading session.
You do, mate.
You too, Ben.
I'll talk to you guys later. Good luck, everybody. All right.
Thanks, Blake.
Thanks.
Nice looks.
Thanks.
Great bias chart. Hope everyone had a chance to take a picture of it, because you'll see those numbers. You'll see reactions from a lot of those numbers. How you doing today, Steve?
Good, Dale. How have you been?
Pretty good. Just wondering, even though we got that pop in the dollar yesterday, was it enough to change the view now that it's, fading a little bit here?
Listen, the dollar yesterday with the reversal, first of all, we had plenty of engulfing candlesticks yesterday and outside candlesticks, which show reversal. We had this happening in the DXY, right? We had an outside
50% level.
White candle in the DXY, which, by the way, saved the DXY from breaking down from this channel that we were talking about yesterday. So we had this. We had, let's go to the S&P. Here's the S&P. We had an outside reversal on the S&P, quite a powerful candlestick. Nasdaq more or less the same, so on and so forth. And then anything that's correlated with risk, posted the reversal yesterday. Now, the question is, what happens today? Because if we go down to the 4-hour chart, and let's take the S&P to begin with, since we just showed the S&P. Blake already showed that the S&P is back testing this horizontal support resistance area. And yes, I do agree. This is a key area of resistance, and I'm assuming just by eyeballing it that it might even be the 61.8. Yeah, it is almost the 61.8. So, decision time.
Yeah.
We resume lower from here. Fine. I mean, we can really, start unfolding the previous gains and move to the downside. But we invalidate yesterday's reversal, which as you see happened in a very short time, because this is a 4-hour candle. So all the reversal, the big reversal we had yesterday was in a matter of, what was it, an hour or whatever. So we managed to erase this reversal. I think that's going to be a very bullish signal, because I'm pretty sure that a lot of people following yesterday's statements from Trump, rightly so. I'm not going to blame them. They said, listen, the only thing that supports this market at current valuations is the expectation of stimulus, nothing else. So, you take the punch bowl away from the party, people are going to be, are going to be angry. So this is the situation here. So if Trump completes a 180-degree turn, and he does push forward with, I don't know, some kind of a compromise, some kind of an agreement, I think that this market is going to really destroy people that were selling yesterday. Now, here's the Nasdaq, potential head and shoulders formation here, but same thing applies. As long as we respect yesterday's reversal, I mean, there is a decent argument here for a move lower. But I want to see what we're going to do today. I think today is very critical. And if you take some of the assets that are usually nicely correlated with risk, you're going to see a different picture there. For example, let's take copper. Here it is. So We expected one more leg lower for copper to complete at least like an ABC, which it did perfectly. But look at the reversal following that. So there it is. Copper is actually likely breaking higher from what looks like a flag. So that's one thing to note there. We already talked about it, but yields are moving higher, which usually is a sign, usually is a risk on sign, usually because lately things have been, too complicated and correlations have really, have really lost their sense in many ways, or at least they're not as strong as they used to be. At the same time, and we had noticed that, some time ago, crude oil doesn't seem to be bothered about any of that. In all actuality, crude oil is flirting once again with a bullish breakout. And if that actually happens, and we do break out from the symmetrical triangle, I think that we're going to see a higher high before we can see a deeper correction. Because in all essence, this was not the type of correction I was waiting for from a move from like 11 to 43. This is a continuous, by the way. That's why.
So here's a new trading technique based upon our environment. Buy the ugliest clothes that you can find.
Because somebody's going to come to the rescue within the next few hours.
Ugly, but yeah, that's a new thing. Buy breakdowns, buy outside key reversal closes, and you'll get rich.
Yeah, I mean, one thing is for sure. And if you remember, Dale, I started saying that a few weeks ago. If you remember when we had debates and discussions about it, if you remember, I was very clear and I said, I don't want to be short the stock market so close to the elections. I'm not saying it can't go lower, but there's one certain thing is that they're going to do everything in their power to not let it go lower. Now, that doesn't necessarily mean they're going to succeed, but knowing that especially this period of time, they don't want it to move lower and they're going to do whatever they need to do to, keep it elevated. Sorry, I don't want to be fighting at the same time the Fed and the government, right? I don't. I mean, the only trade I took in the S&P lately, if you remember, was being long from 3330 to almost 3400. I made some money.
That 3400 is really an important pivot now. I think you
yes,
have to
it
pay
is.
attention to above it, below it for biases.
Yes,
so,
it is. It is. It is quite an important pivot. Here it is. Yes, it is. And as I said, today is going to be quite an important day to see if this horizontal support resistance area, just a few handles higher, the 61.8, if this reversal is to be respected, we have to more or less reverse lower from where we are at the moment. Otherwise, as I said, many people are going to try to push this lower from here. Many people shorted yesterday. Many people are going to be shorting this rebound. And from a risk reward perspective, selling indices as we are here and putting your stop loss above yesterday's highs and look for another leg lower, it makes sense. I mean, it totally makes sense. This is a very easy trade to take, having to do with just risk managing it, right? Here is your stop loss, the green line there. And your first target should be something like here, 300 or so. So a very decent risk reward ratio, right? You're risking, what is it? You're risking, let's say 40 handles. Yeah, 40, 45 handles roughly to make 90. So, it's a 3-to-1. Not bad. It's decent. But in any case, if this doesn't work out, I wouldn't want to be short. I think we can really squeeze higher. Now, having to do with metals, Yesterday's reversal lower also reversed the metals lower, and both of them, both gold and silver, broke through what was anyhow looking like a bear flag, right? So as the rebound in stock indices seems to have now reached the level that the market needs to make a decision, same thing is happening here with the metals. They did break down yesterday. They've retraced a decent amount of what they lost yesterday today. And if they are to resume lower and confirm that those two were bear flags, we can't move much higher from where we are at the moment. So from a risk reward perspective, exactly the same principle that applies to the S&P that I just showed applies to the metals. So you want to be, short-term short gold and silver. This is exactly where you do it. You place a stop loss above yesterday's highs, and if it works out, you can see gold attack the 1820 area. You can see silver attack the 21 area, and it's a good deal, right? It's a good deal. Let me go through some of the questions.
Are you able to scroll back?
I wasn't too late in logging in, so I have a decent amount of them. Let me see. Any Q4 hour head and shoulders? Yeah, I already saw the. Could you show VIX? Yes, actually, thank you for reminding me. VIX is also at a pivot area here. If you remember, we talked about the VIX and how the VIX has been for a period of time range bound, with support being 25 and the resistance being the 30 zone. So we're knocking on the door of this 30 zone area. I think any break above 30 is probably going to produce another leg higher for the VIX, which, even if it's short-lived, I wouldn't be surprised at all if it reached 45 once again. So, this is what I see here in the VIX. Watch this area. I think a break above 30 is going to do quite a lot of damage to the S&P as well.
Agree.
I favor taking a Kiwi yen short rather than indices. I'm, if we had this conversation up to a few months ago, yeah, I wouldn't blame you. Correlation isn't that good as it used to be. What I can tell you about the Kiwi yen, we mentioned it some time ago, is that it's, consolidating in this triangle. You can see it here. As long as we are above 69, 68, 70, and below, what is it, like 72 and change, there's really nothing to do here. But I do agree that a break below 68, 70, I think it opens up quite a lot of downside. There is a pocket of air at least until we reach 66. So, yeah, I mean, there is a trade to be taken here. But if you're looking for short, I would only do that on a breakdown from this confluence of supports, 68, 70, whatever it is. And then, yes, you have like 250 plus pips of downside that I really don't see any area of support that could potentially stop this move. So as a breakout trade, yeah, looks interesting. What's happening with natural?
We have some smart people in our group.
Of course we do. What's happening with natural gas? What's happening with natural gas is quite clear in my mind. Natural gas is testing what seems to be a bull flag at the moment. It found support at the 50% fib, testing resistance. Given the fact that the previous move higher was extremely violent, I think there is a very, very good chance that we're going to see another leg to the upside. So watch this, let's call it 270 area, $2.70. I think a break above it can really make natural gas explode once again. And I think that if we do get a break above 270, this next time 290 is not going to stop price. I think we're going to penetrate through 290, and I'm pretty sure that that's going to act as throwing gasoline into the fire, because I'm pretty sure that a lot of stop losses are gathered above 290. You can also, if you want to see the bigger picture, if we do break above 290, just look out at this bottoming pattern, right? It has been developing since the beginning of 2019. So it's almost a 2-year bottoming pattern that a break above 290 is going to put an end to it, and we're going to be looking at something different in our hands. I think that what happens afterwards can develop much faster than the average person believes. So watch out for natural gas. I think it can, it can produce some.
Let's see the monthly.
You want to say monthly?
Yeah, I want to see the telescope.
Let's go. There it is.
Huh. Look at that, just a marginal new low from the 2016. Yeah, that looks pretty good. So just to give you an idea of where it could go to, $5, why not?
Oh yeah, it can.
Why not 6? I mean, we don't show a lot of history on this CFD. Futures would show more history on the monthly, but anyway, that yeah, you're right, a triangle breakout there. I used to read articles on how natural gas, compared to Europe, what you guys, the prices there, and really across the world, we have the cheapest natural gas. So if we start exporting more, which, I think there's been infrastructure for the US to do it, that prices would go up once we, are able to sell it into markets where the arbitrage is huge. I mean, I think it's different prices in Europe for natural gas, much higher than what you're looking at right there.
That is true,
isn't it?
At least in Greece, I can guarantee you.
Yeah. So I mean, I think it's throughout Europe, and it could like revert to the mean and get up to those levels. And I think it's $6-7 in Europe already. Or I don't know what it is in euros, but just
I think long term, and if you remember, we had this discussion some time ago. I think long term, everything that has intrinsic value is going to explode higher.
Yeah.
Everything and anything that has intrinsic value is going to explode higher, denominated in fiat currencies.
Yeah, a cold winter would help the cause too.
As simple as that. Yeah. Yeah.
Okay, that is the main bone of contention in current. Okay, so they've been buying it from Russia. Okay.
Yes, the vast majority of us, we're buying from Russia. Yes,
you communists. I mean, nationalists, whatever it is. Anyway, you got a couple more minutes. We have a great guest today, Michelle Schneider.
Sorry, who do we have today? You said
Michelle Schneider.
Okay.
At Market
Perfect.
Minute, and she's really good at intermarket relationships. So looking forward to talking
that's going to be
her.
definitely an interesting interview. Okay, is she around? Because I have a meeting in her house. So
she is.
Okay, bring her on then.
Okay,
mate.
All right, buddy. Have a good
See you all tomorrow.
meeting. Okay, thank you, Steve. Welcome back, Michelle. Welcome back.
Can you hear me now?
Yeah, welcome back, Michelle.
Oh, thank you, Dale. Nice to be back.
Yeah, great to hear your voice. So, how are you?
I'm just great.
I know that tone of voice. Okay, so I mean, I was wondering. Well, first of all, let's get you to shares a screen with the. green
Yes,
button.
I'm just doing this right now. So let
So I,
me,
I I was commenting that, it's really difficult to be a position trader, that you almost have to take it when you have it. Like yesterday, if you went home with the way things closed, you're giving a lot back. It's almost like there's a new trading technique, Michelle. Buy the ugliest closes possible and you'll make money
it
because
does
there's no
seem
follow through,
right. Well, well, first of all, there's been a pattern ever since Trump has been in office, which is to create a problem that doesn't really exist and then come back and fix that problem that didn't really exist so that you look like a hero. Excuse me. Think I need a little sip of coffee after
No,
that.
no, but I think you've described it perfectly. So,
Well, I'm a
how do you,
chartist. You can chart
yeah,
it. I mean, that's really basically, and so
interesting.
yesterday when he came out and said that the stimulus was off the table, I thought, okay, I'm not panicking here. This is definitely Trump. We just created a problem, and then probably within 24 hours, which is exactly what happened, I'm going to come out and say how I'm going to fix the problem.
Right.
So right now, the fact that they want to do it piecemeal in terms of the stimulus is not a bad solution, by the way, rather than try to go for the whole big thing.
Enchilada, yeah.
Right, the whole enchilada. But
Yeah.
on the other hand, we'll see what happens on the Dem side. I mean, this has really been unfortunate for people who are really desperate for this money because they're in the middle of a political football game. Where actually some of the players have coronavirus. So just like real football. So
Boy, you're on top of your game today, Michelle. Anyway, okay.
well, what do
Yeah,
you do
it's
in this
true.
situation? You have to have a sense of humor. You have
Yeah.
to step back and you have to trade with a plan.
You ever
with-
think of stand up?
Oh,
Huh? It'd be great. I'd come to that show. Anyway, so yeah. So let me ask you this. So
mhm.
you have a sense of humor, but we trade to make money, and I want to know what you're seeing. And what's interesting? I know you're a big commodity bull,
Mhm.
and I'm going to guess that you're going to talk about grains today because they've been dynamic compared to softs. Well, is that a good prediction?
Yes, except for sugar as a soft has been exploding, which is something that you and I have talked about in the
Yeah.
past because most people aren't really familiar with the sugar market. But it is a very interesting little market because it seems to be sort of a secret bird's eye view into what's happening on the deflation inflation argument. And actually,
Yeah.
let me put up a sugar chart while we're talking. So you
Okay,
can
and I
see it.
don't want to get you off track with what you planned on talking about today too, but after sugar, you could just go back to what you had planned on.
Well,
talking
I
about.
think I think that what we have to really talk about today is in terms of the actual market, the rotation that we started to see and are still
Yeah.
seeing, even with the comeback today, which I
Yeah.
think actually is a market that is looking at the potential Biden win. And I'm trying to say these things without any kind of political stance one way or another. That's not interesting or healthy to even come from that place. But to me, from just an observation, the rotation starting Friday, by the way, when Trump's illness got announced and the
Yeah.
market sold off, what closed green? The Russell 2000,
Good point.
the retail sector, the
Right.
transportation sector, and the regional banks and financial sector, which, by the
And
way,
the FANGs and MAGA haven't even recovered from Friday's highs.
Right.
Don't they kind of look like they all have head and shoulders formations, Amazon and all of those stocks that we could be building a right shoulder here?
It's very possible. I'm going to show you since we're skipped back. We'll go back to grains and sugar in a moment.
Okay.
But
Okay.
so by the way, 4 of those 6 that I just mentioned are part of my economic modern family.
Right.
And the reason why, for those who are not familiar with it, that I even created and called it the economic modern family is because these one index being the Russell 2000 and the 5 sectors, which would be retail, which of course has a lot of e-commerce in it, but also brick and mortar, the regional banks, the transportation, the semiconductors, and the biotechnology really are a huge part of the GDP in the United States and a much truer representation of what the US economy is doing, or what Mr. Druckenmiller called the inside of the market. Happily for me, I had created this family before I heard him say that, so it was an incredible affirmation. And I did it as a family, mostly for my own just way to follow it. I have characterizations of each one of these.
Yeah.
Which if I ever did that stand-up, Dale, I could do it in character of each one of
You
these.
could do it
Yeah,
at financial summits.
exactly,
Yeah.
exactly.
So,
The-
all right. So the
So,
family, what's the family saying here?
well, if these are the weekly charts, and I always like to look at the weekly charts because it sort of helps you step back a little bit. And if we just go here with the IWM, which for some reason is the only one that's in red and green candles, this is the 50-week moving average and the 200-week moving average. And you can see that the 50 is still under the 200 here,
Yeah.
but at the same time, the price is above all of them. And
Right.
we're heading into the February swoon price. 160 is definitely a good price to look at because that was that last low, January 31st, before we had the 1, 2, 3, one more attempt to go up as the SPY and the Qs were making new all-time highs. And if you recall, IWM was not. And then
Right.
boom, the drop and then the
Yeah.
swoon. So here we are right now into that area. So this is going to be very, very key. We're in an extremely interesting inflection point for the whole market, but particularly for the modern family. It's come back stronger than NASDAQ and SPY. Yes, and partly I think it's because the Biden win represents the fact that there'll be big taxes on these large corporations, and these are the small cap companies. Not that they won't probably pay more in taxes, but they represent more fiscal spending is also part of what the market might expect, which means perhaps finally some kind of an infrastructure type package. Certainly would help with people who need jobs, but that's practical, so we're going to
You
put
know,
that away.
Michelle, since you brought up taxes, I heard this and it makes sense to me. You'd be surprised how many people take action based upon taxes. I tell the story that during the dot-com bubble, when it started to roll over, people would come to me and say, well, what do you think? I said, well, why don't you just sell? And they would say, oh, no, I can't do that. I'd have too much capital gains tax exposure to have to pay. I said, well, you should be glad that you have capital gains. And they let it all slip away. So what I'm hearing now from a tax perspective is the FANGs and the MAGAs is where people have the biggest gains. And why not book it now before taxes go up, perhaps on capital gains, and rotate into what you're talking about? Does that make sense to you?
It does make sense. I think that it might be premature because we don't really know what's going to happen come
Yeah.
November.
Yeah,
If it's
we
a
sure don't.
landslide, well, no, I mean, people are saying unless it's a landslide, most likely that the election could wind up being contested. That's
Yeah.
very possible. There's certainly been comments about that, so it's not like something I'm making up out of my head. And so I think you have to really, before you start absolutely planning for what is going to happen in terms of the next administration, just from a trading standpoint, obviously, if you've been long these big FANG stocks and these MAGA stocks forever, certainly we are in our NASDAQ All-Stars model still long a whole bunch of big stocks, but it's interesting. Our rotation has been more into stocks like Moderna, Zoom.
Yeah.
We're still in Tesla. So Moderna being actually, a medical stock. What else are we in? I forget.
Yeah,
But
I'm looking for 100 in Moderna. If you pull up Moderna, we have 2 drives on it, and
Mhm.
it just, to me, the pattern looks incomplete, and it looks like we should see new highs for the 3rd drive up there. And just from memory, I think it's around $100.
Right. So I think it would be smart anyway to start looking at what the rotation is going to count on the fact that the rotation is going into value stocks. if you're a short-term trader, I mean, the most thing I'm most upset about yesterday is I wanted to get into a bunch of things with the swoon at the end of the day prevented me from doing it. For example, I really wanted to get into a couple of stocks that are more cannabis based, which of course started to rally when Trump got sick, starting early this week. Why? Because of a Biden administration. They figure it might be friendlier to the final legalization of marijuana, or at least not so restrictive if it doesn't actually get through. And by the way, to me, the president is only one real small factor. It's going to be the Senate. I think that's
You're
going to be
right. I never
extremely
knew how
important.
powerful the Senate was until this point in my life and watching this.
Well, McConnell might be the most powerful person right now
Yeah.
in
He's kind
and
of like how James Baker was that ran,
Mhm.
ran the government. McConnell's really the president.
Absolutely. And it was McConnell I read today that had said to Trump, we should just stop the negotiations on the stimulus until afterwards.
Hmm.
So, and then probably Trump got smacked around a little bit by Mnuchin and Powell and it's like, what? No, that's not what you want to do. Not very popular for you
He
getting
did it right
reelected.
after Powell was hat in hand saying we need stimulus the same day.
Yeah, yeah, it was interesting. And I mean, and like I said, I didn't get us out of any of our positions. It certainly, made me get out of my chair and go, what? But nonetheless, it did prevent me from getting along a bunch of stuff that I wanted to look at yesterday. And also in the transportation sector, interestingly enough, you've got all the airlines up early this morning. And
Yeah.
transportation, let's just go back to the Modern Family here. Transportation, here's your IYT. This started leading. Look at when this actually started breaking out above its moving averages, was here back in late July. And really, once this took out like that 190, it started to show leadership. And then you can see here, this 200 level has been very pivotal. It's not quite made new all-time highs yet, but it's close. And don't forget, none of these, except for semiconductors and biotechnology more recently, have made new all-time highs, while the NASDAQ and the Qs kept going to new all-time highs during that period where it was just going up and then up and then up. These are still lagging. And that's why I think the most amusing thing of everything that comes out of the politics is how great the economy was before the pandemic. If you look here, not so great. So now, as I said, to me, what's so fascinating is the market is starting to get some real optimism, of course, after yesterday, and who knows, any tweet can come out and kind of kill the rally, at least from a temporary standpoint. But IYT is strong. IBB, obviously, with vaccines, I think if there was any silver lining out of Trump's illness, whether he's recovered fully or not, is that some of those medications have gotten attention and could potentially work. Not that anybody could probably afford certainly the treatment that he had, but it's been very, very much the rush for a vaccine, the rush to try to create drugs that help with the symptoms. And then 140 here in IBB is going to be big. It's been flirting with it, so it's got to hold around this 134, 135. This actually did make new all-time highs in July. And what's interesting about that is that it hadn't made all-time highs since 2015. So biotech woke up a little bit.
Is that the same case with trannies? I mean, because the Dow theory guys, when the trannies were weak, were saying, we're getting Dow theory sells. Maybe they're going to get a Dow theory buy with what the trannies are doing.
Absolutely, Dale. This is exactly what I'm trying to say, is that we're seeing now the rotation. If we take a look at a monthly chart here on the trans, here's your all-time high. Was back in 2018, right? In September, almost 2 years ago. And we're tackling it. I mean, maybe it's easier to show everybody this way instead of looking at it one by one. If we go to IWM, here's the Trump swoon, but we were tackling 160 right here. So you can see how important that is on a weekly basis. We're above the 23-month here. If we go to XRT, which also started to show some leadership, XRT all-time high, also August 2018, 52.96. We got to, we made a new all-time high in retail this week. Look at that. Well, not this week, but in
Wow.
August. Right.
Yeah.
And now these are monthly charts. Look at this. We're having an inside month, another inside month. This
Yeah.
to me does not look bearish. That doesn't mean that couldn't change, but right now it doesn't look bearish. And then IBB.
Oh, and I
Here's
have
that-
one question before I forget from an attendee. Jane would like to know which cannabis stocks you like.
Oh, okay. That's a good one. Well, first of all, I think one of the strongest ones is Grow Generation. And right now you can see it's been consolidating really pretty much between 14 and 18. You can really see it clearly here on the weekly
Yeah.
chart. I think right now you're sort of right smack dab in the middle, although it's coming higher. It's going to
Yeah.
in the choppy zone. Probably if you just waited now for a close above 18, that
Yeah.
would probably be the most conservative way to look at it from a more swing position. And then you could probably get out, risk a couple of dollars and see if it can hold around that 15, 16 level. But also Tilray, I was watching Tilray the other day because it made a huge reversal pattern and then sold off yesterday and now is coming up. But really the stock that we've made money in this year, believe it or not, was CGC, Canopy Growth. We caught this move up, got out, have watched it go all the way down. It made a new low here. When I say a new low, I mean a new multi-month low, not a new all-time low, because that
Right.
happened earlier, but a
Yeah,
new
years.
multi-month, and then had a strong finish, of course, yesterday being the swoon day. So
Yeah.
now I would say even this could be interesting over 15. If you just wanted to take a shot, I like doing this, is I like to probe once the consolidation on a reversal pattern confirms over 15, and you have a risk really to under 1383, which is the low that we had on October 2nd. So yeah, that would be Grow Generation, which has relative strength compared to all these others, CGC, and it's always good to look at, oh God, all of a sudden my mind is going to go completely blank here. Well, let's just look at the actual ETF, MJ.
Okay.
Very similar to what I just showed you with Canopy Growth. New multi-month low here, 1014, big
Was
day.
it Aurora that you were thinking of?
No,
trying
not
to-
Aurora. No,
Okay.
no, it's a much bigger company starting with a
Okay.
G, with a G,
Okay.
and I cannot think of it right now.
So
Sorry.
how's that, Jane? You have a few ideas now?
Well, I like this idea better, Jane, is look at the actual ETF, because yesterday was an inside day. So
Yeah.
even though, so now you really have a nice risk, let's say to under 10 to give it a little bit of room,
Yeah.
and see what happens today. But if it takes out the high from the other day, 1083,
Yeah.
that's an 83-cent risk. It's worth it. I would certainly not go in like gangbusters. But if you get an 83-cent risk and you say, well, at least maybe it can get back up near the 50-day moving average, that's nice. That's a nice little profit. 83-cent risk to make, maybe $1.50 or something like that, or at least take some profit there and raise your stop to no loss and see where it goes. But again, I think that this whole cannabis space could have some rally here in anticipation, but I wouldn't necessarily say that the election is a lock at this point. As we know, in 2016, everybody thought at this point that Hillary was a lock, and we know what happened there. So if you're making Biden administration trades, just always be careful. Now, let's just go back to the Modern Family for a second
Okay.
here. The regional banks
Thank
have been the major lag.
Yeah.
And so right yet now in the last couple of days, also in the face of, and by the way, I use regional banks as opposed to big banks because I think this is a better measure of the US economy, because these are the smaller banks like your State Street banks that are within the communities of the rural communities of the United States, not your Bank of Americas and your Wells Fargos, et cetera.
Right.
And this too made a
Nice
new
pop.
new multi-month low followed by an inside day, gap up the next day. There was your buy signal. And again, now we're looking at 40. So
It's
it's
a
just
pop in yields helping that sector out, and also that the yield curve is steepening a bit.
a little bit.
Kind of
Yes.
move. Okay.
Yes, absolutely. That's helping. I think that, we can go through each one, but let's just take a look at semiconductors, because I think there's so
Okay.
much to cover. I want to get a couple more things. So
Yeah,
you're
okay.
looking at semiconductors now. The semiconductors, of course, had made this was a new all-time high here, and then had that reversal pattern down, which it made about a 10% move lower, which is exactly what you expect on these reversal tops and reversal bottoms, is about a 10% move. And now look at this. So interesting, tackling the high pretty much yesterday of that day, of the high of the day that started to go down. And of course, this was the Trump tweet swoon. So I wouldn't rule out tech completely at this point. But nonetheless, you could see further weakness here while you start to continue to see the rotation in some of those other sectors. So that's kind of what we're looking at. So let's move on to the commodities here, because my biggest prediction, and God, Dale, you know that I've been saying this now long before anybody else was saying this.
You were the first.
I was the first. Yes, I was the first.
God knew before you, but then you knew.
Absolutely. And maybe,
All right.
and maybe also Ray Dalio, but he is God. Yeah. So
yeah. Okay.
yeah, he was kind of on my page with this too, in terms of prediction that the dollar was going to have a swoon. Everybody that I saw on Twitter that I respect was so bullish the dollar. It was crazy. I was the only voice going, dollar's going down. And not only has it gone down, you can see that it had a nice little pop after it got pretty oversold. But now if we break down again under this 50-day moving average, and this is DXY, by the way, which is 93.27, I think that little pop, that was about it. And now we can start looking at it. And the reason why is, look over here. This is an 80-month moving average. And this 80-month moving average, by the way, is really kind of like a business cycle. It goes way back on this dollar. It hasn't been below the 80-month really since 2011, 2012, and it broke it this year. So it really shows you that the whole cycle of the dollar, it could go up and down, but in terms of the whole cycle of the dollar, it's kind of broken.
Headwinds.
Yeah. So if this dollar continues to decline, and by the way, speaking of Ray Dalio, he's like looking at China investments now because the yuan has been starting to do much better, then this is where you're going to start to see your stagflation scenario, which doesn't matter if it's Trump or Biden, is a very, very difficult situation to deal with economically. How do you deal with it? You raise the rates, you kill the market. You don't raise the rates and inflation goes out of control. Cost of living's already gone up, make the dollar worth less. People are hurting even further. It's a real nightmare. It happened in the 70s. And that brings me back to sugar. Because sugar, believe it or not, even though oil was a part of it, that we have a different type of stagflation environment. And this is where I feel like sometimes shaking these people and going, wake up, life has changed. It's not an oil induced stagflation that we're having. It's a food induced stagflation that we're heading towards because of all the reasons why, not to mention, drought conditions around the world, but supply chain disruptions, lower labor force, overproduction for years that they reversed to try to get the prices up. And now all of a sudden there's a shortage. I mean, this is really going on. And in the 70s, sugar actually signaled before gold and silver that inflation was coming. And look at this now. This is now at a level. I mean, it was there earlier in the year, as you can see, but it's come back. And I think this has more room to the upside. Look at the longer term picture here. I mean, you could see this thing from really 2016 on, just did nothing and now is starting to come back. And I think this really merits, we've been long sugar for a long time, but the same thing with soybeans. And we're looking at ETFs just to make it easy. Soybeans, which is coming in, also had a huge move up. Wheat.
Yeah, all of them.
Huge move up. Corn.
Yeah.
Huge move up. And it's not too late. If you really want to continue to play, I would look here.
Just starting.
It's just starting. Exactly. Don't feel like you missed it if you're not long down here, because look at this DBA chart. This is the agriculturals ETF. This is now flirting with the 50-week moving average. And also look at the monthly chart, total downtrend that is now reversed. It looks like this thing can actually really go. And you have a very tight risk. You're wrong, by the way. If it breaks down
under the July lows, huh?
under the July lows, and also look at the what's happening here with the moving averages. We're about to get a golden cross. This has not been bullish in so many years that this would be a huge trend change too. So my
Did you
advice
hear
to
about what's happening in China, Michelle?
which
They're
part?
actually they've cut down the amount of food that families get. They're
Mhm.
calling it like a soft famine.
Yeah,
So
they're
that,
calling it clean plate, the clean plate movement.
oh, is that it? Okay.
Yeah,
So
yeah,
no
it's
waste, and actually maybe they're preparing people for just, for a famine.
yeah, it's possible. It's possible.
I
So
mean, I don't think they have those, like we do, that Marie Osmond sells, and all those dietary foods you could order and have them come to your door.
yeah, no,
They're
what they're
small
doing now,
meals.
right? But in restaurants right now, exactly that. In restaurants right now, you have to get only a half portion, and they want you to clean your plate. And it's not just for conservation, though. I mean, there has been a lot of waste that I've heard in China in terms of people eating out and what they order. So
Okay.
it's not, but it is indicative of what I'm talking about here.
Okay.
So
They're
people
not doing
say,
that here in the US, are they? Clean plate?
I think here in the US with our obesity problem, I don't think that's a big concern. So I just wanted to end with
What a blast. All right.
China's not known for obesity.
Well,
But
as a kid, my mom would say, Dale, finish your food. There are people starving in China.
yes, my mother used to say the same thing to me. Of course, I used to say to her, "Go ahead."
Oh, Michelle, you're great.
All right. So anyway, I just want to end with oil because the metrics of inflation, people should understand, is very heavy oil based. And so when you talk about, and when you see the metrics, especially by Powell, we want inflation to heat up. When you see it from some of the other analysts and macroeconomists who say that we're in a deflationary period, they're looking at oil. And if you look at oil, yeah, right. Oil is really reflecting all the issues that we've had, obviously oversupply, low demand, etc. But interesting, this also had kind of a weird spike low and then gap up. I
Yeah.
wouldn't keep my eyes off of oil. I actually was long, just a small position. We did a probe half position. We wound up getting stopped out and losing money on that. And that's fine. I don't mind probing like that. I'll do that a lot because when I catch it big. Right now, I'm completely aside, but I can tell you that if this thing actually cleared over these levels right here on the weekly chart,
Yeah.
and anything could happen, by the way, to make oil go up.
Yeah.
Even though alternative energy has completely blown this away, and people have spent more money on electricity and gas at a statistic high of 60 years, and that's another reason why technology and alt energy has gone up so much. I wouldn't rule this out yet, because you can see if this can get over 30, and that's a exponential moving average right here, then this whole thing starts to look like a base, and we don't know. I actually read that in Europe, which obviously they're having huge problems in Europe right now in terms of the furloughs are ending and what do they do, and maybe negative rates, which of course people say would be attractive to the dollar. I'm not necessarily so sure about that. Maybe a blip. But what people are saying is, hey, you want to get young men into the labor force? Start a war. I was like, wow. I hope that doesn't happen, but
What's that?
certainly start a war. You want to get young labor force employed,
Oh,
put them in the
yeah.
military. And the only way
Yeah.
they'd go to the military is if there's a war. And I thought, oh my God, I mean, that is such an insidious way to think. But
Yeah.
historically, it's not completely crazy.
How about in China when they had the one-child policy and a lot of younger men can't find wives?
Yeah, there are way more men than women in China. That's
Yeah.
a problem. Actually, it's funny. Let me just talk about China for 1 second,
Okay.
because I have been asked, yours truly, to speak at the Bogu Forum, which generally is in Beijing. Obviously, this year it's virtual. I will be the first woman ever in their 7th annual Boku Financial Forum to be a speaker this year. It's a great honor, and I am so, yeah, I'm just so.
They're lucky to have you. as far as I'm concerned. And I'm going to make a big push, and I brought your name up before for our next summit. I don't know if you caught it, but we had Schwager there and a lot of pretty good people a week or so ago.
Mhm.
But I said, like I've told people, like before the interview, you're one of the best intramarket analysts I know. And the
thank
way
you,
you
Dale.
put the whole jigsaw puzzle together, I learn every time you come in. I get clarity by the end of the interview. So I do follow you, Michelle. So how about for people that are listening and will see your video, how they could
Oh,
follow you besides at Market Minute on Twitter? Why don't you show your website?
oh, great. Okay, let's get the website going here. Hold on. Take me 1 second to get it up. Mm-mm-mm-mm-mm. We're actually in the process of a major redesign of the website. But here is the website. Market Beat is where you see our dailies. And I have a person working with me now, Forrest, who's helping with the dailies. And we've been training him and he's doing amazingly well, a young guy, and we love him. So now you'll see his name around. Also, though, if you want to see some of my media appearances, everything that I've been doing gets posted here. I've been all over the media lately, which has been a lot of fun, But anyway, so marketgauge.com, you can sign up for at Market Beat, not only my daily, but also Keith Schneider, my husband and CEO. He does a weekly outlook with a video. This is all free. And then if you ever want to look at some of our products and services, you just have to click here and you can see. And we have a live chat page. So if you have any questions, Mary, our customer service person, is amazing at getting back to everybody. So that's it. And yes, thank you, Dale. It's always a pleasure to be with you in the
Yeah,
morning.
really, but it's great to hear your voice. It makes me feel like I'm home. All
That's so
right.
sweet.
So,
All right,
and someone says you look like Joan Jett. I hope you.
oh, interesting.
You,
I used to
you
hear
rock, Michelle. You rock, huh?
Joan Jett. Yeah, we're probably contemporaries.
Yeah.
Shh. I didn't say that, did I? Okay.
All right.
All right.
Well, really, thanks a lot for all the great ideas, and really,
Thank you.
I'll get a hold of you, and if you still have time for us, we'll book something in December. Okay.
Sounds great. And you take care of yourself, Dale. Stay healthy.
All right. Thank you, Michelle. Everyone, that's Michelle Schneider at Market Minute on Twitter. Go to her website. She's one of the best intermarket analysts and a great trader. You notice how she waits for the market to prove itself before she puts her money on it. So that's a wrap. Everyone, we'll see you tomorrow. And don't just count your pips or your sugar cubes or whatever you feel is valuable in the material world. Count your blessings, and we'll see you tomorrow. You're welcome. Adios.